Hi traders, Nick Shaheen here for Benzinga, MarketFi. Create income with option spreads. Give us a visit. We do great work. Recapping week ending Friday the 13th on a full moon, no less, and looking into next week. So this week was kind of all over the map. We almost called it to the minute as far as action. When everybody was selling off a few months ago, what did we say here? We said that we're not going to sell off on the current variables. In other words, we're going to sell off. If we're going to sell off, it's going to be on the blind side, because even after like a 10% correction in the high flyers, Momos, Nasdaq, Google included, and the small caps, head and shoulders started to talk and calling another 10% from there. And I kept saying that sure we could, but not based on what we see already. We're going to get lower if we do, based on something that we haven't seen, and that could happen any point in time. So we did not trade accordingly. We thought we were going to bounce, and we did bounce. And just when we started running, they butted up against the 1900s quite a few times, and then the bears got overzealous and they started tightening. And guess what? When they broke over 1900, boom, they went out in style, and we ripped last Friday, Monday, what, 4 or 5, almost 5 points, maybe 4 points or so in the small caps. So that wasn't gonna last. I bet on it, and I was talking about it, and I wrote up a few things about it. We did have a few breakout moments as far as the SPY and the SPX, but I think we closed right on the edge again. We fell under it yesterday. We had 3 consecutive red candles in the SPX, and the last one was bringing the SPY just under the limit of the bearish pattern. We have higher highs and higher lows, and the range is tightening. Most often it breaks down. So, but if it breaks out, it breaks out. But more often it breaks down. So anyway, the bottom line is the thesis hasn't changed. That was the bottom line this week for me. What I took from this week is my thesis, as a matter of fact, is now solidified even more. All along for 2014, if you've been a member, you've heard me say we're not going to rip from here. We have room for the upside, but definitely I was saying not 5% in 3 days. So we're going to keep creeping up with periods of drawdowns. So I don't see doom, meaning I don't see a whoosh of 15%, other than a completely new shoe to drop, a black swan event, and that can happen any day, like I always say. But we can creep up. I don't think we're going to leap up. Where's the catalyst going to come from? So having said that, my thesis for the whole macro, the global thesis, is solidified. Now I can continue on trading the micro, every ticker based within that thesis, based on its own merit. You've seen me scalp some profits in Priceline recently. I've taken a few other lottos that played out, and one that didn't play out today, which was really strange, but it was free money anyway, so I'm not too broken up about it. That was in Lulu. So anyway, today I don't want to concentrate so much as to the game plan from the full positions standpoint. I want to game plan small cost lotto style trades that could pay, and there's no shame in lotto style, because if you can throw so many out there, and if you lose on the couple, all you need is one big one to hit, and you paid for all of those misses and then some. And I'm not just willy-nilly, and that's the spirit of today. I'm not throwing darts. I'm basing my lottos based on things I'm seeing. Like today, I know some people made a killing in Lulu, puts, and market makers must have eaten it. I don't know how that could have happened. I have to revisit the numbers. But anyway, I expected another pop in Lulu. I did benefit from it. I booked it early in the week, and I took some of the profits and added some more at a different level, and I expected another pop, but they tried a couple of times, it didn't get there. Regardless, so I want to identify some plays that way. But before I do, I want to emphasize something today. Pick levels. You can't just set trades based on hunches. I use hunches, but they're driven by levels. Okay, so I have a level like going into every day. I work really hard to come up with some levels for the members to trade for the day. I update it daily, and I say these are good for the week, but they change daily, so every day I update them. I had somebody by mistake put a trade out in months based on the levels I've given them. They had misinterpreted the levels. I said, no, no, it's not too late to unwind that trade and reset it differently, and they did. Luckily, it wasn't too late. But have levels and trade them. You can't just throw darts. And if you're throwing darts, more often than not, you end up buying or selling from or to people who've been on the bandwagon, and you're going to be on the losing end of things. So, before I move on, make a note of my email, sellspreads@gmail.com. I love getting emails from you. I get hundreds a day, given I have so many members and followers on StockTwits and Twitter. But I do love every comment, even though somebody called me on a mistake today, and it was a complete brain fart on my part. I'll chalk it up to Friday the 13th. Anyway, I wrote up a whole trade, a lotto trade based on something technical that I found by mistake, and I ended up making a mistake on top of a mistake. But the trade wasn't a mistake. I just used the wrong name on the correct ticker. So regardless, the trade still stands, and I'll probably share it with you today. So follow me on Twitter if you don't do yet, and that's my email. Hit me up, and visit us on MarketFi. Good company, excellent products, one of which is mine, and it's one of the leading ones. So looking forward to see you there. Let me see if I can move this out of the way for now. All right, so looking at this is a confusing chart for most, but it is, you can zoom in on it and probably figure it out. I don't need you to see the minutia. I want you to see the flow. Okay, so speaking of levels, going into today, we had levels set aside for many of our trades, and I don't just trade willy-nilly. Like I said, I try to set my trades based on data that I see. So before the morning started, I said a few things to help guide the trades. And let me start by the big guy. Okay, today, who's the big guy? Can anyone guess? Anyone? Bueller? Big guy is Apple. Here's Apple. Okay, I'm gonna zoom in on the one day. I said before the start of the day. I'll try to read it word for word here. Gosh, I have too many monitors. I'm losing my mouse. Sounds like a problem. So Apple, I said 92.86. I said 92.86 is the high point of interest this week, and it's slightly bearish. Get that? 92.86. Anything higher is resistance. No clear level of support until 90.71. So what did I say? 92.86, 90.71. So let me highlight 92.86 for you. Okay, this is 92.80. That's close enough for government work right now. And 90.70, what did I say? 90.71. All right, so this is 90.73, close enough for government work. Okay, so I said Apple's going to trade between these two levels. That's before the open. And look at this. It tried to get up to 92.5, but it was rejected from the pre-open. Actually did hit that. And then they tried to sell it off. I said we will find support somewhere around 90.71. So 90.88 was rejected, and it bounced right back up. So I could have been lucky, right? But I don't think so. I also said, where did Google end up? Goog, not Google, the Goog. Goog ended up at 551. Beautiful. I said the Google is 550 to 560. Looks like the trading range. It had great support at 550 and great resistance at 560. So there's no way it was going to break 560. So I was more voting for the fact that it's going to support at 550. And sure enough, it tried to break down to 545, but it was rejected. And it clawed all day to get to 550 and plus. So market makers know what they're doing. So that was Google right here. Okay, another big guy. Let's make it 5 minutes here so we can see it easier. Okay, so this was a gutsy call, because if you look at yesterday's, this was going downhill, and then this morning it looked pretty grim, and that was Google again, but they trade in tandem. So the spirit that pick levels. So these are two levels that I had picked, and again, I could have been lucky, right? So let's pick another one. Let's go here. IWM. Whoops. IWM are small caps, and I'm going to make it 5 minutes and zoom in onto it, okay? Okay, so this is the IWM right here. Okay, my IWM was word for word 115.5, still a strong support. So a small creep up today, even though when it was looking red in the morning and ugly, right? I said we're going to creep up and close slightly green today. All right, so what's slightly green? How about 0.17%? Is that slightly green enough for you? So the level stood. I said 115.5 is strong support. So they tried to sell it off, and where did it close? 115.5 and an extra 9 pennies. So I missed it by 9 cents as far as support. I could have been lucky. All right, so let's pick another one. Let's pick another one. Let's go with the RUT. RUT is small caps sister index. Okay, so here's the RUT. What did I say about the RUT? I said yesterday, so that was the day before yesterday's beginning, before the open yesterday, I should say. I thought 1165 was a sweet spot based on the data I had, and that was it. And I said today it looks like 1160 would be perfect pin. I don't think they published it yet as far as option expirations. They are always late doing that. I don't know why. If they settle it at the open, why do they wait until like 2 o'clock in the afternoon to publish the value? They don't have it yet. I'll check on it a little bit and see if we get it before I end this video. So 1160, but it opened right around there, I believe, right? So this is 1163 and then quickly fell. They don't take the exact open. They have to quote have enough of the stocks that are in there open, so it's kind of like a moving ruler. So let's say they close in the first 10-15 minutes before they actually called it open, would put it exactly at 1160. But the point is, it held the 1160 and it closed right around there. Again, I could have been lucky, right? Can I call another one? Let me see here. I can't remember what I said about the SPY. I did say about the SPY. I may have missed the SPY. Okay, so the SPY, I said 195 is neutral zone and would make for a logical pin. So I did miss the SPY by a little bit. It's high point. I said 196 is a high point, and it won't act as a magnet today. It would have been an extreme wall if had we run up. And I said so we could drift up a little. So where did we close? We closed drift up a little. So we did drift up a little. I had that right, and we could drift up a little today. And 193 is first or second high point, and it's neutral. 194, 193 and a half, both support. So I thought that 194 and 193 and a half were both support, is what I said. So I did not miss it. I was mistaken about being mistaken, so I was right. So anyway. Pick levels. You can't trade without levels. Whether you're entering a long-term trade or a short-term trade, you need levels. If you're day trading, you need levels. You can't not have levels to trade. So these were 1, 2, 3, 4, 5 out of my 6 picks for the pre-open that were on the nose. What did I say about the SPX? That was the 6th one. Let's put it right here. Okay, SPX. 5 minutes already. I'll zoom in. Again, everybody was seeing doom. I said 1900 is still the high point of an interest, but not going to be a magnet today. 1925 is the start of defense. Okay, so it came to close to 1925, to 1928, 27 and a half, and then bounced off. If I said if price stays about here, 1930 would make a good logical pin. And it closed 1936. But I also said that 1940 was going to be, I didn't say it today, but I said it yesterday, and I noted it throughout the day, that the 40 is resistance. And I don't think it was going to break it, and it didn't. So they tried a couple of times. So important. Like, I'm looking to enter a trade. I know my value. I know my ranges. I know where the best time to trade to get the most premium. I sell premium, therefore I want to get in right from the get-go. I don't want to get in and get red immediately. So you have to pick. You have to pick levels. Otherwise, how are you going to trade? Okay, having said that, now I will look into what I plan for next week. Okay, so looking into next week, I mentioned that I wasn't going to do a lot of full positions as far as options plays, but I want to pick on a couple of stocks. One of which is I want to dig my heels into Equinix. This is purely technical, absolutely purely technical. So I don't. It's not to judge the company. So this is today. Today was pretty bullish. Obviously, it you know I've been shorted via debit put spread, small cost, right? But it does owe me some money, and I added to it cheaper today. So now I only needed to drop maybe 4% in order to break even. But I'm counting, actually less than that, 2%. But I'm counting on a bigger drop. I'm seeing some things in the options market that I'm not alone in counting on a bigger drop. So I want to take a look at it from different perspectives, okay? So I'm looking at it, today's high was 206. By the way, when I went short, it immediately dropped. So I could have booked profits, so the trade was profitable. I overstayed my welcome, and now I'm stuck in it. But it is a lotto trade, therefore it's like a lotto ticket. When you buy it, you don't cry over it, right? So what is that, a J-hook pattern? But anyway, here's a run up. This is a 180-day look at it, okay? And I'm looking at it, and it's got a big run up, and it drops, and another big run up, about the same size. Now I don't have any indication as to that it's going to drop right here, but a hunch, no. But the options market expects it to drop. Now here's a look about it for the 1 year, okay? Now this could be some giant cup and handle, I guess. So it foretells a lot higher prices, which is not crazy. It has been in the 230s before, so that would be about the target of this. I'm not a hardcore technician, but I do follow technicals. And if I look at the weekly, it's clearer that way. So it's at a point where it needs to make up its mind, right? So whether it breaks down or it continues on running. I'm bearish the whole market short term, so I want to say that it might break down because the market is not going to help it break out. If the market upside is limited, then it's got more chances to break down. Plus, I go with the this is a 2-year weekly look at it. I go with the odds. It failed here, it failed here, it's going to fail here. So it failed, one, failed. I have more fails than one. And plus, is this head and shoulder-ish? 1, 2, 3. I don't know, maybe stretching it. But given the macro picture, that if I'm not that optimistic as far as leaps and bounds in the market, then the market is not going to carry it up. It's not going to nudge it up. I also had an article this week about Apple, how it's going to drag the markets down given that it's all-time highs, unless they deliver a flying car. So, or really nice looking headsets. No, that's the joke. That's a joke, that last part. So Equinix is one of them. I want to take some cheap put spreads that may pay. I want to count on a drop under $200, so it's going to be a cheap put spread, and it's going to pay me, hopefully. Now another one is AA, Alcoa. And that one I found by mistake. I had a member who had asked me about Apple, but they typed AA and then the PL fell over to the other line and I didn't see it. So I went ahead and looked at AA and was like, "Ooh, wait a minute. That looks almost exactly like Equinix." And even the options market also looks like somebody had caught it right at the time it leapt up in January on earnings, I think. And, I don't know if, anyway, I see something in the options market that could tell me that it's about to turn. Plus, looking at the MACD, hey, it's not so crazy, right? It's looking okay. That's a good lotto ticket. So I bought it. I bought straight out puts here, and I wanted to drop under 14. And then I'll be in the money. Nice. This one does not cost me much. It doesn't owe me much. I'll say thank you if it happens. I did the same. So these two are almost identical. I'm also picking on the SPY all by itself. Why? Because I also see something in the options market. What I see is the fact that the fight from the 1900s spilled over. They kept on punting. They as in the bears. They punted, and now they're stuck in the Junes. But they're stuck big time. So they either are going to punt out or they're going to fight, and I think now they have some oomph to fight, given that it's going to be really volatile next week, and they could just blame it on the Fed or blame it on this or inflation numbers or whatever. So they have ammo. They could decide to fight it out. So I want to be a bystander picking up some scraps. So I bought some puts in the SPY. I also did some other stuff, but that's members only. So I bought some puts in the SPY again, cheap. I paid 8 cents, I think. Possible payout is 50 cents total, so minus 8 and fees. Just a small lotto ticket, just so I can participate. I'm not doing much as far as full positions. Instead, I'm trying to nitpick on a few weak tickers. I did it last week, and it paid well with WLP and company. LVS, I think, was one of them, and they immediately paid on Monday. So hopefully you followed into that. And that's what I'm trying to rinse and repeat, only with different tickers. My major rinse and repeat was Priceline. I had sold some calls, naked and leaps in the 1500 area, and I sold them for $45, and I bought them back for about 24, 23. I left a couple of dollars on the table because I didn't catch the absolute bottom, but I thought on today's drop I should book some profits on those. So if it pops back up again, I'll repeat it. If not, I may do the opposite. So if you want more information about that, let me know. So anyway, sorry it took longer than I wanted to, but here's what you're going to do. Get a pen. Get a pen. And I want you to get your first of all, get yourself a source for levels. And if you don't have one, please hit me up here. I don't mind helping out. If I can do it free, I can. If not, I invite you to join. There's no risk, but get a source of levels. If not me, somebody else. There are tons of people that give good levels, and but you can't trade willy-nilly. It's like throwing darts. Throwing darts works every once in a while, blind. But if you've got good aim or somebody that can guide your dart with air, puffs of air from here and here, do it. So get levels. That's my point of today. Get levels. Don't trade blindly. Nick Shaheen for Benzinga. Create income with option spreads on MarketFi. Hope to see you or chat with you soon.